You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. That music means it is Interview Tuesday time here on the Options Insider Radio Network, where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network. Reminding you, if you like what we do here on the network for this show, any of the nearly dozen programs we do here on the network, keep rating and reviewing out there in your platform of choice, wherever you get it, Apple Podcasts, Google, Spotify, up there on Audible. I saw our stuff up there the other day next to the great classic works of literature, which is always fun. So wherever you get it, make sure you keep rating and reviewing. It really does help the legion of new listeners who are discovering the world of options and then finding their way to our content out there. Of course, keep sending in those questions and comments. We do have to hear from all of you folks out there as well. Let's see who we're hearing from on the old Options Insider Radio program today. I'm pleased to be joined by a newcomer to the show and indeed to the network. He is Rory O'Kane, the managing director at Simplex Investments. Rory, welcome to the Options Insider Radio program.
Well, thank you, Mark. Yeah, no, this is the first time, long time in coming. I know we've been trying to do this for the last few years, but thank you. Thank you for the invitation. And give you a little background on me. I'm kind of old school, a little older than you, I think, Mark. Started back in '83 as a runner on the CBOE floor for the Chicago Corp, and then got a job at the risk arb firm, and then joined John Stafford Trading, one of the legends on the CBOE floor. From that, in the '90s, I got to run one of his many business units, Rombo Trading. It was his equity and OTC market making arm, and we got through the 99, 2000 dot-bomb crash, and then was sold to TD Bank in 2002. And TD Securities acquired at that time Stafford Trading and all its companies and Letgo. And we had nearly 700 people across the country on every floor. And they had patience and tried, but it eventually ran out. And by 2009, the handwriting was on the wall, and there were only 70 of us left in Chicago. And from there, 2010, Knight was getting into the business, and I had the options relationships and an equity background, and it was a nice fit for a while. And then Knight, got swallowed by GetGo, renamed KCG, and that marriage didn't last particularly long. And I had moved on before the Virtu acquisition to Two Sigma Securities, and now my home, Simplex Trading.
Let's get into that a little bit then. Simplex Trading. I didn't realize you were back at Stafford back in the day. I think everyone spent some time at Stafford over the years. It was kind of the way station for the prop trading and market making world. But now obviously you're hanging your hat over there at Simplex. So what is Simplex? Catch us up. What are you guys doing over there?
Yeah, no, when I, been there a little over a year now, and it's been great. It was founded in 2004, and Simplex Trading was a prop trading firm, and they understood the wave of electronification that was overtaking the industry in the early 2000s. It was quickly changing the technology, the rules, market structure. It moved options business really from the floors to the desktops, and now here we are on mobile. They became a broker-dealer in 2014 and expanded into option market making in 2015. And we presently operate on all exchanges in all auctions, making markets and trading over 4,000 classes and trading millions of contracts every day. We expanded into the retail consolidation business, and that's kind of where I come on board. In 2019, initially leveraging controlling investment in matrix executions. They had the initial client connections and smart order routers. But now we're using our own engineering to expand that business opportunity.
Interesting. Entered the options market making fray in 2015. You don't see a lot of firms going that way. Usually it's the other way, right? Firms started earlier and they slowly phase out or they divest of the options market making part of their business because it's a very challenging business to be in. What was it that made the folks over there at Simplex decide to dive into options market making when most other firms were heading the other way, Rory?
Well, I think there was a space and there was a need, and they basically, their evolution was to expand their footprint. And, they had a great understanding of the market structure, the environment that they were operating in, and had been wildly successful and continue to be successful in good and bad markets. And it was just time. I believe, Eric Swanson, our CEO, who has been CEO since 2014, undertook that next step. And he's been a driver of a lot of the firm's strategy and development since he joined the firm.
Well, you mentioned you joined them about a year ago, a bit of a perhaps inauspicious time to be joining an options market making firm right at the height of the madness that was 2020. Walk our listeners through that a little bit. We've obviously explored the maelstrom of the options market over the course of the past year from a lot of different perspectives, but you don't get to look at it through the lens of options market making very often. What was it like in the height of the madness there in March of last year and then getting into the summer and, of course, the insanity around the election? We saw vol going all over the place. We saw unprecedented things happening, like the entire options market going fully electronic for the first time in its history. We saw volume not just continue, but explode over that same period. So a lot of crazy things were going on at the same time. Rory, I'm curious for you. It must have been interesting joining a new firm at that time. And then B, convey that to our listeners. What was that period like from an options market making perspective over there at Simplex?
Yeah, no, from a market maker's perspective, we had struggle like all market making firms in a low volatility environment pre, 2019 through 2020. It was a difficult environment to operate, but it was a perfect storm with the pandemic in 2020. And then the retail, just taking off. And that was, basically a multitude of drivers. You had the new platforms, your Tasty Trades, Webull's, Robinhood's, making it easier to engage in the option markets. You had zero commissions, easy mobile access. And then you had the stay at home, kind of not much to do, stimulus checks. And then the clients, understanding this new retail client base, understanding, leverage and capital efficiency and giving retail a better exposure to high notional stocks. With a smaller account opening, you could trade an option rather than trading 100 shares of Amazon and such. And then education, because we had a lot of time on our hands last year too during all this, whether it's social and TikTok videos or more formal offerings like from the OIC and others. It was just the perfect storm for options to be embraced by the retail community and drive volumes to new highs.
Now, you mentioned you're working over there on the retail consolidation side. Not an area of the business that gets discussed too often, maybe outside of the rare blow up of a thing like Robinhood or something along those lines. So walk our listeners through that a little bit as well. What exactly are you doing over there when you're consolidating all that retail order flow, Rory?
So, when I had conversations with Simplex last year and joined forces, I was intrigued because they had this investment in matrix executions. Because building a router, a customer router to handle all 16 exchanges, all the pro rata, maker taker, and do all these kind of decisions in split sub-seconds is no trivial task. And they already had had a consolidator router. And Simplex is a 51% owner of Matrix and has a nice partnership. They were already getting some of the retail flow that Matrix had. What has happened, though, since late last fall, what's new and what we introduced is our SX router. And since October, all new clients have been onboarded to this platform. So it's 100% Simplex engineering. And the platform leverages our option market making capabilities and safety features for the benefit of our retail clients. And, retail routers, particularly after what we've been through the MIM, the GameStop and meme kind of explosions of a couple months ago, need to have more proactive, protective features to mitigate problem trades before they happen. And this has been built. This router is built with that in mind, and clients are highly valuing it.
Let's talk about that retail explosion and some of the other events you mentioned there, the meme stock explosion, all these things that, again, when we walked into this business many years ago, we were told an option on a stock really can't trade at a 1,000% implied volatility. And lo and behold, we saw that and many other things come to pass just in the last few months. It's interesting. Whenever we get market makers on here, I like to pick their brains about some of these esoteric topics out there in the space. And one of the things that we heard bandied about a lot, Rory, during the height of this meme stock explosion back in, January into February, when GameStop was really just carrying all these stocks with it, was that the options market and options market makers were fundamentally mispricing upside calls in a lot of these names, that the old way of doing business, the old way of modeling these calls was insufficient to account for the clearly, at least at that time, strong demand for upside calls. And I saw a lot of people who you think would probably have been around the space for a while and probably would know a thing or two calling for something like this, which to me struck me as odd because, at the end of the day, these little blips in supply and demand, they happen and then they get smoothed out and you go on. You don't structurally change how you price these things. So I thought that was a bit of an odd suggestion, but I saw it bandied about in many different areas. I'm curious for you, Rory, did that conversation ever come across your desk over there at Simplex? And what are your thoughts on the notion that the old way of doing business, the old way of pricing these options, particularly in the upside call wings of some of these crazy meme/tech names, it needs to be adjusted for the modern 2021 market, sir?
Well, I don't think anything needs to be adjusted. I think, it's the models. And when option volatility just explodes obscenely, pricing becomes where it is. And, it's all based on the models and basically hedging and such. And a lot of things come into play. No one's going to be I think the hero that kind of steps in there and says, this is going to be, at $1 when the world, and no one knows, and you can't get that stock because it's screaming to hedge yourself. You don't know. So a lot of things, I don't buy that a lot of things were kind of fundamentally or structurally out of whack and should be fixed. I think it's more on the customer side and maybe on some of the platforms. I think the problem is market orders in these kind of highly volatile situations, and where somebody's going in and buying a put, $2 put at the market and they buy it at $10 type of thing. Those are clearly erroneous type trades, and it's identifying those, adjusting them or busting them is the key. And that's one of the things that we're looking at and we're working on, is basically putting a lot of safety checks and things into our routing and our models to protect the customers, to protect the retail investor, because we don't want them to have a bad experience and just say, oh, I just traded those things for the first time and got my face ripped off, and I'm never going to do that again. But it was the nature of that, that short squeeze. They're vicious. They can be violent. We all know that, heard about the numbers on the being short the stock from those hedge funds and such. So, yeah, it was probably a once in a lifetime and a career opportunity. I don't know if we'll see the likes of that again, but there are some things that we could do to mitigate some of the risks to the retail community and help them weather those and navigate through those violent markets.
On the topic of protecting retail, sometimes from themselves. It's clear a lot of people are cutting into the options market these days who probably aren't that well versed in a lot of these things. Like you mentioned, kind of doing market orders in these crazy periods. And we've seen a lot of new additions to the network over the course of the past year, many of whom are very new to the world of options. That certainly can be a recipe for disaster if it isn't treated well. We've had a lot of people come on the network recently, Rory, and advocate for maybe we need to do things a little bit differently. Maybe, it's great that firms like Webull and Robinhood have really democratized options and opened the doors to a lot more people. But on the flip side, maybe the argument is maybe they've made it a little bit too easy. People are getting into options without really fully knowing what they're getting into. Some people have been advocating maybe we need to rethink the old school level 1, level 2, level 3 approach, maybe add a few more gates or roadblocks in there. We had a guest recently suggest maybe if you want to get level 3, you have to pass some sort of very basic question exam, a multiple choice exam of, what pin risk is or something like that. So it is something that's been bandying around the industry. Sounds like a lot of your job these days, Rory, is implementing those protections on the technological side. Do we need more maybe on the front end as well from the broker dealers in terms of saying, hey, maybe pump your brakes a little bit. Maybe you're not ready to dive into level 3 just yet.
Well, I think that's at the broker dealer level where they have to know their customer and know the risks that they see, their customer facing, and puts protections in to help them. I think probably that's all for those firms, compliance departments and operations departments to see where their complaints are coming from, but and margins. But all in all, it's on their side. I think education is going to go a long way in helping weather this and help retail stay engaged after we get through this, because I think we're moving into that next phase of the industry and the markets where the themes are changing. Volatility, except for today, it seems, has been coming in. And now, now instead of taking lottery tickets on Tesla, I want to protect my gains in my account, and I want to use puts and more passive strategies as I get re-engaged in the world and the economy as things open up. So that's a great question. I think, maybe, it's been too easy. And some people just, human nature just say, yes, I understand when they don't really fully understand the risks. But I think it's just going to be education and each of those individual firms knowing their customers and what they need to do.
Well, we're coming off the heels here of the big OIC virtual conference just concluded last week. A lot of people have been over there, coming on the network of late, discussing various topics, appearing on different panels. I noticed your CEO was on a panel over there at OIC. So what was the topic du jour? What were you guys discussing at OIC this year, Rory?
Well, I think the topic du jour is retail. And we know these things will slow down, and keeping them engaged and what we can do as an industry, from the exchanges and what they're putting into place and making the retail experience better, market makers, what we can do, and then the retail firms and institutional too, because they're still around. They're not as big a piece, it seems like, in 2020 and so first quarter 2021, but they're still there and they're going to always be there. So I think retail is the threats, the opportunities. That was the focus of this year's event. I thought the OIC did a phenomenal job. I thought it was the best virtual conference I've seen. But I do look forward to being on the sales and relationship management side of the business for as many years as I have, as getting back in front of people and interacting with our peers. But all in all, we wanted to be there. We wanted to support the industry. That is the one industry event that has the whole ecosystem represented. And we just thought it would be a great opportunity to get there. And we were excited that Eric got on, one of the panelists. I think we have a great story and a great future. And we would like to share it.
Speaking of that future, like you mentioned, everyone's discussing the notion of options volume. It's a hot topic. Everyone thought coming into 2021 that maybe the volume would subside a little bit as the vaccines got out there and people got back out there in the world a little bit. So far, at least, that hasn't been the case in 2021. We've seen March, the busiest month in the history of the business, April numbers coming out any second now. So we'll see how well April did as well. Of course, January number 2, February number 3. I think December was number 4. So you're looking at a almost straight progression, new records every single month for the better part of the last few months, Rory. The question on everyone's mind these days is, can the party continue, sir? Can we keep these numbers up as we head on into the latter portion of 2021? You guys have your fingers on the pulse, particularly over there on the retail side as well, Rory. I'm curious from your perspective, what are you seeing out there and what are you guys expecting for the latter portion of the year?
So we had like a gentleman's bet with one of my peers friends on the New York Stock Exchange in January. We were talking about what it was going to look like after 2020 was such a successful year, and that growth could we continue because we just came off a great January, and lo and behold, February is even better, and March is even better, and I did see some things on April. I think it was the fifth in history, largest monthly numbers. So I'm gonna reassess mine. At that time, I said 30 million contracts per day, which would have been a little over 10%, or about 10% of last year's average daily volume. I think it's probably going to be more like about 35 million contracts a day. I think things will come in. I think seasonality is coming in. Outside today, I said, the option volatility seems to be falling. The themes are shifting. So the customers in retail are, automatically going into, one lot Teslas or GameStops and such. And with the economy opening up and like I said, the seasonality, I think we're going to have a breather here. But all in all, that retail genie is not going back into the bottle. And I think volumes this year are going to be 10 to 20% better than last year. And I think as themes change and the markets change, these new customers will embrace puts and other strategies to help weather any kind of violent markets going forward and protect their gains. It's been an incredible year so far, and I'm sure they want to keep what they have.
Are you saying new customers can do more than buy calls, Rory? That's legal? I didn't know that was possible, sir.
Well, it seems like last fall, right, and into the springtime, it seemed like they really love those. They were enamored with those one lot short-term shots. It seems like that bloom seems to be off that rose. Over the last month, we see volumes dropping off considerably, and in one lots too. So we'll see what the next theme is and what next driver that brings them all back to their mobile devices.
Speaking of drivers out there, like I mentioned earlier in the conversation, your firm, Simplex, one of the few that has joined the options market making fray over the better part of the last decade or so. Most of the other firms have been heading the other way. It's an issue. A lot of people are concerned about the long-term nature and sustainability of liquidity in the options market if we keep losing market making firms. I'm curious from your perspective, what do you think the options market, the options industry as a whole can do to incentivize more firms to follow the path of Simplex and dive into the options market making fray here in 2021 and beyond, Rory?
That's a great question because you're right. I think it's one of those businesses that over the last year and a half everybody wants to be in it, but the cost of entry is prohibitively expensive. It's a tough business. It's getting tougher, with now longer and extended trading hours. I saw some of the numbers from the OIC on strike proliferation. It's over 1.5 million. It's a really, really tough business. That being said, if you have strategies and models that work in good and bad markets and you're successful, there's no stopping you. And I think that's where we are. The next step is the evolution on the retail and trying to touch more of that. But it's a great question. I don't have the answer. It looks like to get in this business, you're going to have to be a bank or a hedge fund or such, because you're going to need some money. And the technology challenge is arduous. So,
well, Rory, unfortunately, that music means we're coming to the end of our time together here on the Options Insider Radio program for today. But before we go, we like to leave our audience wanting more, Rory. So if there's a topic you didn't think we had a chance to get to yet on the conversation today, or perhaps a tease, a hint of what our audience can expect coming down the pike from you and the team over there at Simplex, now is the time, sir. The floor is yours.
Nope. Well, the only thing I have to say is, we're excited to build out this router, our new router and capabilities. We've been adding clients, and it's been successful so far, and we expect to expand that. One little thing I do want to, because I'm showing my age, but about 10 years ago, one of the firms I've dealt with over time had told me that the average retail option user was male in their 50s, college educated, kind of using a desktop computer. And now the average users on some of these platforms is 20 years plus younger. They're female, and they're mobile only. And I think I think it's an exciting time to be in this business. I think there's a new generation of users that are engaging the marketplace and using these tools, and I don't think they're going to go away. And I'm really excited about the future for our business and what's going to happen after 2022 and beyond. But I think it's very good, and I'm excited. And I'm excited to be with Simplex Trading and the team there. So that's it.
I like it. I like leaving our audience with a little bit of optimism. Well, of course, listeners, we'll always leave you optimistic here on the network. Optimistic for more shows to come. Of course, tomorrow, Education Wednesday, what Rory was hitting on earlier, the importance of education. You get a double dose of it tomorrow with Options Boot Camp and Options Playbook Radio. Back at you on Thursday, of course, with episode 2 of the bi-weekly options extravaganza known as the Option Block, as well as TWIFO this week in futures options, Friday volatility views, and it all kicks off again on Monday, episode 1 of the Option Block, and the Crypto Rundown, everyone's favorite show these days, all the way through to another Interview Tuesday and another episode of Options Insider Radio.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.